Hello and welcome to this preview of the annual meeting of the EBRD. I'm with Sir Suma Chakrabarti, the EBRD President. Welcome, Sir Suma.
Thank you.
And obviously one of the things you're going to be discussing at the annual meeting, which is in Sarajevo this year, will be the reviews you're undertaking of both the EBRD's operations in its existing countries and whether it should go further afield. So tell us where we are with that.
Well, we've done a major review, really leaving no stone unturned of how we could actually do more in our existing countries of operations, more quality, more quantity of investment too. And of course, this shows that provided everything went perfectly well in every single country, we could increase our investment volumes from about 9.5 billion last year to potentially, say, 11 or just over 11 billion, 11.4, I think, by 2021. But everything would have to go right in every single country. And that's always tough, because what you're really talking about is the enabling factors like policy reforms to encourage investment to come to those countries. And that's what we're pushing on in every single one of those countries.
Because presumably you don't want to be in the situation where you're being sort of not forced, but pushed to lend because you've got, excess capital.
Absolutely. The worst situation would be, and we would lose our reputation if we prioritize quantity over quality. It has to be quality. So there'll be no slippage on standards. The same standards will apply that we apply now. If everything went well in each of these countries, as I said before, then we could get to something like 11.4 billion by 2021. But in every single country at the same time, that's quite a stretch to imagine, I think. So we'll see how we get on, but that means that our staff will be working very hard in each of these countries to try and promote the investment climate that would lead to such investment levels.
Okay. Now, what about going further afield? I mean, you've already been critiqued, haven't you, the EBRD, for being a bit too broad and not having quite enough focus as it is?
Well, there are those who, shall I say, always think, everything is country context and you can't get away from that. Well, we have also been praised by probably more than those who critiqued us for making a success of the fact that we've shown business model has trumped geography. So these days, our private sector business model, which started off just in the post-communist countries, and then Mongolia joined. Yes, another post-communist country. So up till that point, people would say this is what EBRD is about. But then Turkey became a country of operations. Then the Middle East and North Africa, SEMED as we call it, Southern Eastern Mediterranean, Greece and Cyprus. Many of these economies were always market economies, but not very effective market economies. And that's where the EBRD business model has done just as well as in our traditional region of Central and Eastern Europe, the former communist zone.
Okay, because you mentioned Turkey there. I mean, Turkey was getting about a fifth of the total investment.
Yes, Turkey grew very fast. This is actually the 10th year of operations in Turkey. And a couple of years ago, Turkey, we lent, I think, at 1.9 billion. And that was a record level. It's actually come down since then to just under a billion last year, partly because of a slowdown in Turkish economy last couple of years. But it's a very high quality portfolio of ours, 97% private sector portfolio. That's, shows exactly what makes us so distinctive amongst the multilateral banks. But it also shows we could operate very successfully in what was always a market economy, albeit not as effective a market economy as it is today. And EBRD's had something to do with that.
Okay, and what about going into sub-Saharan Africa then?
Well, this is a question, and we shouldn't do it just because we have capital. I mean, that's the wrong reason. The capital is, if you like, a license, a permission to be able to look at the question. We should only go to sub-Saharan Africa in a gradual way if we think our business model really would help to answer the questions of what needs to be done in sub-Saharan Africa, as we've shown in other parts of the world. So the study really isn't just a study of capital. It's a study of what are the transition challenges in these economies. Which of these economies would EBRD have most chance of success given its business model, and given also the complementarity with other multilateral development banks like the African Development Bank and others. We don't want to just duplicate, but we are different. We are private sector first.
So do you think you ought to rename the bank? Instead of calling it the EBRD Bank, you should probably call it the Transition Bank or something.
People have always suggested this, in the last few years, particularly as we've obviously focused on different regions. But look, from the start, our largest shareholder was the United States. We have so many non-European shareholders. Yes, the EU has a majority of the shares, and it will do even after the UK exits the EU if it does. But it is actually a globally owned bank. It's global institutions. I always think, these sort of name changes are quite. I think one has to be quite careful about these things because a brand is built up around a name. People understand what you do, and look, we can use the acronym EBRD just as well. You don't have to spell it always out for everyone. The LSE, the NHS, the BBC, they all do very well without spelling out the whole thing.
Fair enough. Okay, now what about Russia? Because clearly, I mean, you have put a lot of investment over the years into Russia, and you've stopped now due to the political climate. I mean, what will it take to get you sort of back into Russia?
Well, I think
clearly the country needs the help. Yeah.
This is really a question for shareholders, not really for management. It was shareholders that gave the guidance that led to us not pushing forward new projects in Russia back in July 2014. I don't see any evidence of a shareholder consensus that changes that viewpoint as yet. So we are always open to the arguments if shareholders themselves come together and say, actually, it's now time for a return. But they haven't said that. We do manage a very large portfolio still in Russia. It's a very good portfolio. We have a very large office in Moscow still, which is important for the portfolio in Russia, but it's important for Central Asia, for the Caucasus. We have an excellent banking team there that help develop projects in other countries. So Russia remains an important shareholder for us and an important source of skills and expertise for what we're trying to do as well. But I don't at the moment see a shareholder consensus saying, let's change our policy.
And what about Syria? Because it's obviously within where you're operating now in broad terms, it's a country that's going to need a huge amount of help, isn't it, if we get a proper peace agreement?
That's right. Within our existing constitution, Syria would qualify because of its geographical location as a member and a country of operations. It is neither at the moment, not even a member. So obviously one is, we're hoping for a peace settlement, all of us, one day. We're hoping for a return to some democratic norms that would make it possible. And then Syria would no doubt have to apply and get shareholder support. But one day it will happen, I'm pretty sure of that. But your guess is as good as mine as to how long it's going to take before we get there.
Okay, let's leave it on that optimistic note. Thank you very much.
Thank you.